Are you back? This is the second video for the allowance method. I didn't lose you on the first one, did I? This is tough. We've got a contra asset. So we've got accounts receivable, which is an asset that we know about, and a contra asset called the allowance for either doubtful accounts, bad debts, or uncollectible accounts. We'll just call it the allowance. So it's an allowance. We've set aside some expenses we put in there so that we would have the expense match earlier when we did the sale. Now, if we have to use that, it won't mess up our books for the future periods because remember, we're in compliance with GAAP. That's why we have to do all this work. So let's continue. So I've got my two, if you recall, I have my two accounts. I've got accounts receivable with $6,600 and the allowance with a little whopping $48 sitting there just in case somebody defaults and does not pay us. So guess what happens? Joe Smith, I don't really know him. So if there's a Joe Smith around, it's not the person you know. He refuses to pay. I don't know why, but he's not pleased or he doesn't have $10. So we need to write him off. And when we write someone off, that means take him out of the receivables because he's never going to pay us. Not just say he's not a good person, but we want to write him off of here. So the write-off entry is an entry on your sheet of paper. The write-off entry for the allowance method is always a debit to the allowance because what does the allowance have? It has a credit balance. So we want to reduce the allowance and we're going to use it up instead of it, because if we weren't doing this, we might have been sending it to the income statement. We don't want to do that. And a credit to the accounts receivable. Again, we're writing Joe Smith out. He is not going to be one of the people we expect to pay. That's what a write-off is. So when we do that, now our T accounts look a little bit different. See what's happened here. The accounts receivable had a balance of $600. Now Joe's out, so we have $590 in there, right? I mean, that's what you expect. The allowance had $48. That didn't belong to any one person or a combination of people. It was just our guess, remember? 8% of 600. We don't know if that's right or not, but it was just a guess. So now we have used up part of the allowance, $10 of it, and now we have $38 to use on other people. Is that okay? So we've got $590 and $38. So that's this first step after we have a write-off. See if I can do this. I'm not doing a very good job with my easel. Brand new easel. I'm so excited. So we have an allowance, and the reason we have allowance is the expenses, no, there are none now in a write-off. So we have properly matched to another period instead of this period when we had the write-off. We matched earlier, and it's just a balance sheet move. That is so great. All we're doing is moving things from balance sheet to balance sheet, and it doesn't affect our income statement. That is fine with us. So here's what it looks like again. We've got the 600 less the 10 or the 590. We've got the 48 less the 10. We've got the 38. So right now we have a balance between the two of them of 590 minus 38, or which is going to be recoverable. And that's all we think is going to happen. So what if at this point, after we've got the 590 minus the 38, we're sitting around doing nothing, and then all of a sudden, Joe decides to pay us. I don't know, he just had a change of heart, and he sent in some money. Well, there's two more entries that we need to do to fix the problem. Because right now we have 590 minus 38 in there, which is, let's see, 590 minus 38. Net accounts receivable of 552. After recovery, we want to do something with those, and we're going to remember this acronym, RE and CO. For recovery, I made that up again. Remember, I make all these things up. So let's see what happens with this. This is sort of confusing. as if it wasn't before. And let me see if I can not touch my lights as I do this. That's what happened before. Oops. So we're in recovery. Yay! We're in recovery. That's great. That means we got some money we didn't expect to get. So let's do what we should do in recovery. Let's reverse the entry that put us there. So if you remember from the other page, when we wrote Joe off, what did we do? We debited accounts receivable and we credited the allowance. So you can go back and look at your notes, right? Now we're going to reverse or switch that. When you reverse an entry, you flip it. We're going to debit accounts receivable and credit the allowance. That's sort of strange. It's just a reversal of what we're doing. Then we're going to act like we collect normally. And we know that collection entry. We've done that a bunch of times. We debit cash and we credit accounts receivable. So now look, let me pull this out a little bit and let's look at what the T accounts look like. Right now, I have the accounts receivable T account that I started with $600. Then what is this entry? The write-off of Joe. So we had $590. Okay, and that's what we had before. We had the 48 in the allowance and the write-off of Joe, and we had 38. So these are all the old numbers in this up to this point. Now, in the reversal, we are going to debit accounts receivable and credit the allowance. It's getting kind of weird, isn't it? It looks like we accountants don't have enough to do for creating all this work for you, right? Then we're going to collect. So I put a little tiny cash account over here. We debit cash and we credit accounts receivable. And what that does is once we've reversed it, we actually put Joe back into our good list of accounts receivable people. And now we collect him through our normal processes and take him off. So it looks like there's a lot of 10s going everywhere, don't they? But if you recall, this is the purple is the debit to recover. The 10 is the second 10. The credit is the credit to get rid of him. So I end up with my accounts receivable being the same as I had before, $590. And over here in the allowance, I have put the 10 back in there. So now I have 48 there so that I can, if you can see the 48 is there for future people I have to write off. Does that make sense? Go try some problems and I will get back with you on this again. Hopefully you understand a little bit, and if you use your little piggy sheet, I think that could help you too.